You're listening to Mortgage 101. I'm Clinton Wilkins, and this is a special episode that we're going to recap the last year of the show. After a politically charged start to the year, we decided to lighten things up by taking to the streets and chatting directly with our listeners. In July, we joined the Pride celebrations with a special On the Street episode to keep things fun. And to keep the fun going, I brought Blair Patterson from my team to react to some of your best questions.
So we're doing something a little different, and with the help of our production team, of course, got to give them kudos.
100%.
On the street and asking some questions. Let everybody know what we're doing here, Clinton.
Yeah, we had our production team down on the waterfront this week asking, I'll say some of our fans, but people knew about our show. They wanted to have questions answered on the radio and here on our podcast. So we're going to play our question. We're going to answer it live on the air. And we're talking all this month about pride and homeownership. So Blair and I can tag team here are some of these questions, and we'll go from there. So why don't we fire up the first question?
I would ask them what I need to start doing now in my mid-20s to prepare me for buying a home, let's say in 10 years. Any accounts I should be signing up for with my bank, any tax credits, any areas I should be looking into, in the province, any types of homes that are better for me as a first-time buyer. I just want to know where I should start.
That sounds like one of these questions we'd hear on the radio. There's a lot of points there, but I'm going to start out really quick, and I'm going to throw it over to Blair. Types of accounts, sign up for an RRSP, and especially if you're at work and they offer a pre-authorized payment, get it set up, make it automatic, do it. The other thing is the first home savings account. Both really great options to be able to save on your own. And if you utilize both these accounts to their max, you'll be in a great spot in 10 years to be able to buy a home. And you may even have enough for 20% down. But the one thing that I will say, time is money here. So in 10 years, this property might be worth a lot more. 10 years is a really long run time. Yeah. So I think you really need to think about how can you make this happen in 1 year, 3 years, 5 years, 7 years. 10 years is a long, long time. Blair, what do you think?
Yeah, here in Nova Scotia, we have down payment assistance, and you may not actually have to wait that full 10 years to enter the housing market. So that's something to consider. When it comes to the right type of house, I always tell my clients, your first house isn't your last house. Mm-hmm. So buy a condo, buy a semi-detached, get in the market, build up that equity, and get in that inflation lift.
I love it. And, I think in terms of interest rates, you're dating the rate. You're marrying the home, but as we know, marriages aren't forever. So get into your starter home, and it's a great way to get into the property ladder. Okay, why don't we hit us with our second question here?
And if I could ask a mortgage expert one question, it would be wondering what the price of a mortgage is, because I'm not going to lie, I don't know a thing about mortgages, and I don't even know how much I'd be paying for one if I had one.
Oh my God, I love this one. Blair, over to you.
Yeah, that's a very broad question. I guess the price of a mortgage, you'd want to make sure your payment kind of lines up with your income. Mm-hmm. And typically that means not more than 39% of your income is going towards your housing. So when it comes to like the price or payment, it's all kind of geared towards your income and affordability.
Yeah, and I think the rate's important, but Blair, you kind of hit it on the head. Rate is not everything. The payment is very, very important. So know what you can afford, but again, it's really going to come down to your income.
Yeah, and of course, you talk about the dream of home ownership, and there's nothing wrong with somebody starting the conversation, right? Somebody may think, oh, I couldn't qualify for a mortgage, or I don't have enough money, or perhaps they do, or perhaps there are things that you can help them with, right, Blair?
Yeah, I find the people that come into the office and they're like, oh, I feel so unprepared, I'm not ready. Those are the ones that are like the most prepared
100%.
With the best credit, and you just got to reach out and have that conversation.
Yeah, I mean, before we even started our show, I was talking to our production team, and they're getting into checking their credit, which I love. And one of our folks said, what do you think my credit score is? I said, I have no idea, but I bet you it's in the 700s. How about 730? And he's like, 790, and gave me a big high five. Nice. Well, these are great things that we need to do to be prepared to make a big purchase, like buying a home. Most of our questions we received from the public were around uncertainty in the market, but we also came across a few of ... unexpected and intriguing ones.
Yeah, I think I guess I would ask just what the best moves as a new homeowner, things that I could do to improve my situation, maybe getting the best value for my home, maybe keeping my home as something for my grandchildren or other family members and be able to pass that down, because that's something I may not necessarily think of initially, but down the line, see the value of that.
Blair, go ahead.
Yeah, for sure. Like one thing you're going to want to consider is the cost of the upkeep of the home. So along with, saving for retirement, you're going to want to save part of your income for a new roof, for landscaping, things to keep the house marketable. And that will, help you out in the future. And if you do want to pass on that home or build future wealth, keeping up with that upkeep on your home is very, very important.
You 100% have to protect the envelope, as you know, Todd. Like I've owned multiple homes, so you have too.
Yep.
Very, very important. I think the one thing that really rings true to me when I talk to new homeowners is keep a good relationship with your mortgage broker, because we're not one and done. And I think that's a lot different from a realtor. Like when you're buying a home, you're doing the transaction. Once you own the home, you don't really talk to the realtor again unless you're doing another transaction. But let me tell you, these mortgages are coming up for renewal a lot faster than you think they come up for renewal. And a lot of customers we talk to midterm. We do midterm refinances. We do midterm transfers. They renovate their home. They need to pull equity out. They get divorced. They're buying another property. We're sometimes talking to our customers. We reach out to them at least once a year to do an annual review. Yeah. But sometimes we're talking to customers multiple times throughout the year, just depending on what their situation is.
Your marketing material, which you put a lot of money into, and look fantastic, by the way.
Have a good relationship with a mortgage professional that you're going to trust, and stay in that relationship with them for 25 years. Will they always be the lowest and the cheapest rate? The cheapest isn't always best.
Right.
But having a relationship with someone, I think, is more important than 5 or 10 basis points in terms of a rate.
Absolutely.
Do business with people that you're going to trust, and for people that are going to have your back, and be in a relationship with them for a long time.
Good stuff. Any other questions, guys? 2 more questions.
Oh, 2 more. Okay. Hit me with your next one.
Okay. If you're looking to renew your mortgage in the next year or so, would you go variable mortgage or would you go fixed rate mortgage, and why?
Ooh,
I love it. Spicy.
I know where Clinton goes on this one.
Spicy. Yeah. I love it. Let me tell you.
Yeah.
Historically, consumers want to do a 5-year fixed. Right now, I would say the least consumers are doing a 5-year fixed. Clients today, they want a variable rate or they want a 3-year fixed. Obviously, different people have different risk appetites. For me, my personal mortgage isn't a variable. So if anybody's curious, I'm riding that wave, and guess what? My rate today on my variables, my variable mortgage, is lower than any fixed rate you can get. So guess what? I made a good decision. Did I have to weather the storm? Of course. But it wasn't a very long storm, guys. What was it? 18 months, 24 months of the rates being high. And fixed rates have really plateaued. But I think overall rates will come down. So I think it's a risk tolerance between a variable and a 3-year fixed. If you really, really, really want fixed, let's do a 3-year.
Blair, how about you? Have you had many of your clients asking about jumping from a variable to a fixed?
Yeah, when it comes for rates, essentially we get people calling in all the time, rate shopping. And those people that were calling in 12 months ago saying, what's your lowest rate? Well, they're stuck now in that fixed rate at, 4.8, maybe 5%.
Some of them are at 6%, let's be honest.
Yeah. Rather than getting the right advice from a mortgage broker, and that is to take a variable rate, and it still has room to come down, I believe. And with a variable rate, you can lock into a fixed rate at any time. You're not at the mercy of the Bank of Canada. So why wouldn't you want the option of possibly floating that down? And if things, get too risky, you can lock in.
Yeah, I mean, I think it's all the upside on the variable, personally. Because right now, the variable rates and the fixed rates are pretty much the same.
There are some people, though, that just psychologically, they don't have the appetite for the variable. And that's fine.
And I think they don't have a team like us to be able to give them the feedback. Like we're sending email, SMS, I'm doing a live stream, I'm on City News every time the Bank Canada meets. Not everybody is willing to insert and absorb that information and know that there's someone managing, their portfolio, managing their mortgage, managing their relationships. So I think that's important. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.